Hey traders, my midday video here. It might be a little bit long here to explain what I'm seeing and everything, but I'm sorry if it is and stuff like that. Basically, you got your three fib fans right here, and for short-term traders, whenever you come back into this fib fan, you want to count up here. You want to count that as a swing, uh, intraday swing long for some bullish action to the upside in the markets on a lower time frame. Okay. But now since we're using these fib fans on a daily, it's not quite as accurate. But I like to do this to illustrate the where the position buyers start getting in. And this morning, we came right down to the mid 50% fan on the secondary. This is the buy point for position traders to start loading up to the long side in this market. And so far today, we are catching a nice responsive bounce off this buy point. So just keep that in mind going forward here. That this morning's low was a significant point to where buyers should, by nature, start loading up to the long side in this market, in my opinion. And if you want to look out on a bigger time frame to see what I'm saying here, daily 20 years. Okay, so basically this zone right here, this is where you have a responsive potential buy point. You buy here for a couple weeks out for a potential dead cat bounce rally. And so this is what I'm seeing here in the markets. We are catching a little bit of a bounce this morning, and I think this is a very healthy bounce for position traders to go forward in this market, assuming we don't continue to have horrible news headlines. But I think this is what the markets were looking for as far as a bounce potential here. Similar situation right here. I don't have the fib fans on here. Similar situation came right down here to the monthly uh, VPOC, untested VPOC, uh, and found some responsive buying. Uh, so just keep that in mind going forward here. That's some of the things I'm looking at right here in these markets, and thinking that we might have a short-term significant low for the week. This one here was really broken this morning. We are just barely getting back to that 50% fib. This is actually should have been the bounce point for the Qs. So this is my problem child going forward here. The ES futures was a healthier chart than what we're seeing in the Qs. So I want to really point that out where we're trading right here right now on the Qs. Um, uh, so that is something to take note here. We are still the chart is relatively weaker for technology versus the Qs here, which I would have preferred to see the reverse happening for a big bullish call out and saying we were out of the woods. And I can't necessarily say that right here. So that's something I want to. So basically, that's something I did want to point out here that that situation and plus and then if you go look at the Russell, that's just absolute carnage. So it's still back down to the low, still at the lows of the day. I don't think the bottom. We had this prior swing bottom. I think that's where Russell's headed here. So of the three indices, S&Ps look healthier for what could have been a bounce play. But the Qs and the Russell seem to have a lot more damage in their chart patterns, in my opinion. Okay, my first trade today. Once entered it, I entered it right after the buzzer, the market opened, and it immediately went against me a little bit right before the markets went on a 15-minute break. And but it didn't take very long at all, and I had a really nice trade in Microsoft this morning. So I was really happy with that. One thing that I am a little leery about here is that Microsoft's already breaking here. It looks like, seems like right here. We did have that nice responsive bounce, and I took my quick profits on Microsoft because it was showing signs of weakness, which it did. This is the one of all the charts, the chart patterns. Uh, Apple did the same similar situation Friday, and I thought this one here was going to just take off to the moon. And when it didn't do that, that has got me a lot more hesitant on what is going forward in the markets. Yes, we got a nice little bounce here, but I think this thing should have been a much stronger pattern here if the buyers were really willing to step up here and support these markets today. So just keep that in mind. Microsoft is one of those stocks like Apple that there's net buyers out there waiting, and so when you come in the morning on a big gap down, the shorts are going to cover, and you tend to get short squeezes on Microsoft, Apple, AMD, Nvidia, the leaders on the tech side. Those are the stocks that tend to get short squeezes, at least it's somewhat of a short squeeze on big gap downs in the morning session, and at least that's what I'm seeing so far here in the markets. And one of the things I've been using that's different than what Mark has been teaching and stuff, it doesn't really show here on Microsoft. Maybe it does. Wait a minute here, I got the wrong time frame. I've noticed something seriously significant change in character in these markets with all the bearish action. This is actually where I sold. That's the 100-day moving average. I have actually moved it down to 1-minute charts, and I am selling. I'm taking the one and dones for a run up to the 100 SMA on many of my chart patterns, and but I am exiting on the 1-minute chart time frame now. I am not even trying the 5-minute charts. Okay, my biggest winner today was Apple, of course. Similar situation. I did the exact same thing with Apple. I did cut this one early. I saw Microsoft running into that resistance early, so I actually cut this near the same time frame. Apple too took because I even had a bigger win on that one. So and I was running into a pivot point resistance. So I said, you know what? I'm not even going to try to get the 100-day moving average here, seeing what was going on with the market. So I had some really nice gains. I locked in 3 weeks, 3 weeks goals of what I like to make on a weekly basis. So I was really happy with that trade. So I had to live with that. And the third one, I saw the relative volume and typically strength with AMD. And remember, they reaffirmed their earnings forecast Friday. So I thought AMD was going to be really sweet for a nice responsive continuation pattern today. And this one here is where I messed up. I got it right near the open and had to run up. I was up really nice, but I gave back most of that. And before I realized I had made a mistake. I actually thought AMD was going to do the back test, thinking that AMD is typically one of the darlings of the market, and I thought we could get that responsive buy set up here on AMD, and it kind of messed with my head a little bit there because what I was looking at here, if you look on the maximize sell, go back on a 1 hour maybe. 1 second here. And basically we came down to that line that I mentioned, and this is where about where I was buying at off that line, just like a Microsoft. So I was getting a little bit above that line, so I really thought we might get a breakout continuation pattern all the way back up to the white line, and it shook me out of it. So I took a small profit. I didn't get rich on it, but that was one of the trades that I've been looking at. And I've been keeping a close eye on SMH, and it has been showing relative weakness all day. And what got me was we came down to this area. This is the area where traders should be starting to accumulate semiconductors for a response. So I really thought this is the day for an explosive move in the semiconductors here. And as you can see already, we're starting to fade back down, suggesting this actually may not be a relevant buy point for longer term positions. So this is my warning sign going forward here. Some of these positions that the relative strength. You would have thought off this level here, we would already be up here trading on semiconductors if this market was really trying to find some buyers at this point in time. So that's just one of the trades here. I just do not like the Qs showing relative weakness to the S&P, suggesting to me that some of these bounces were just temporary short squeezes, and would likely see a little bit more continuation this week. So something to keep on the back of your mind going forward here. Right now we're even still marking below those prior swing lows. So this is actually giving me a little bit more warning sign that going into the afternoon hours, we're going to have continued selling pressure into the rest of the day, in my opinion. Okay, another one I had on watch was Amazon because I was really thinking about buying it on the dip, and I will tell you why I veered away from this. I was looking for a solid touch of the 1750 area, and Amazon came down a little bit on near the open, but it missed my buy target on Amazon. See, it dipped down just a little bit there this morning, but we missed my buy target, and I had the order set ready to go, and it missed my entry point. But we've gotten a nice little responsive bid here. I think Amazon is actually going to fade right back down here and actually get a solid test of 1750 this week. So just keep that in mind going forward here. That lends more to the bearish side on the markets, it considering what I'm expecting here for Amazon going forward here. I think they got, I think they messed up and didn't give us a solid uh, floor here in Amazon. So keep that in mind going forward here in your trading. UNH, I saw some people in the room talking about it. So they hopefully they got managed to capitalize on this nice little pop in United Healthcare, almost a $10 pop in that in a relatively short order. It didn't show up on my volume scans or anything, so I missed the trade. But this was one I have kept on my watch, thinking that with the whole healthcare scare, that the healthcare industry as a general is going to be catching responsive bids on most dips. Now, what I was really looking for today for some serious buying pressure coming into the markets is to see a breakdown of the XX, which we got that, and a continuation back to the midpoint. And so far, we're not seeing that continuation scenario. But if we have anything happen like we did Friday afternoon, there's going to be some brokerage houses there in Chicago. They're going to have to be forced liquidation of their short VIX trades continued. There's still a lot of brokerage houses underwater. There was a major trade going on before this major dip in the markets, and that was short, long the S&Ps and short VIX, and it's a gamma trade. And we had the first sign of one of the brokerage houses getting going out of being escorted off the CBOE last Friday. I'm kind of expecting we're going to have a similar situation today after this further down move in this markets. It's just completely destroying so many brokerage houses. Look at that 25%, pop in this VIX and stuff. That's even above where that's what caused this massive sell off yesterday in the brokerage houses yesterday. So keep that in mind going forward, or yeah, Friday. Just keep that in mind Fridays. At least, thank goodness we're not up here because that was going to trigger some major problems for the brokerage houses. But between if you're doing a pairs trade and that combo, the S&P is being down. That side of the equation is really going to put them in hot water, despite the fact the VIX is not actually marking new highs here. So it's still a major warning sign going into the late afternoon hours that that's going to happen. In addition to that, with your S&Ps being down so much here, you have to wonder how many margin calls are going to be impacting accounts later on this afternoon, where they're going to have to sell off equities or liquidate gold. Just start covering some of these leveraged bullish trades, which, like myself, I thought after looking at everything Saturday afternoon that we had a bullish setup going into today. And then when the news flow came out and completely destroyed that scenario, I think a lot of brokerage houses and really have a lot of exposure to the long side from last Friday, thinking that we were going to have a continuation pattern to the upside, which we ultimately did not get. So keep that in mind going forward here. Then we have our VIVX. Thank goodness. That means the volatility is crushing. The volatility of the VIX is crushing. So we are actually getting signs of a directional move in these markets whenever you see a crush of this magnitude. So that's a good sign that we're actually getting momentum, and that supports the claim that we might actually be short covering moving into the markets, and we're getting actual physical buying of assets to the long side, supporting a potential claim that we might have actually put in a significant bottoming process here in the markets. So keep that in mind going forward here. That VIVIX is a very important gauge of market. I can't get that thing to move now. Okay, of market directional bias, and whenever that VIVIX crashes, that means they're pretty much leaping to one side of the trade instead of going back and back and back and forth, because the back and back and forth scenario, that's what drives the VIVIX up in the first place. So that's really important to note going forward here. Did I do AMD? Can't remember if I did AMD or not. That was a trade. Oh, I did that one. Nvidia. Nvidia. I tried another one on Nvidia. It was called out in the room. I got it. Let's see here. Yeah, I got it right about here, but I didn't feel comfortable with the markets, and I missed the big move here on Nvidia, and it looks like it's already coming back in. Unfortunately, it immediately took me out of the trade. I lost like $25 on the trade, but Nvidia was a chop fest there. I mean, these intraday trades, they're really hard to make any money on. In my opinion, you have to go in big enough size, and I just think they're higher risk trades to try to do these intraday trades, in my opinion. So that was one trade I did try to do. Let me double check and see what else I tried to do today. Okay, those are only options I traded. I did trade different strikes on Microsoft and Apple. So I did have more than one trade on Microsoft and Apple. So I was doing sticking with the same stocks for the most part, and just trying different strategies for the trades and stuff. But as you can see, as far as the call side goes today, your VXX opened really high today. It's bleeding off a little bit as we speak. And Twitter is really active today. So we were talking about that pre-market, and it seems to be catching a nice little bid in today's session, amazingly or not. And so 2.56% gain on Twitter today. So that would have been a really nice trade. Unfortunately, I didn't get. That sucks. Let me check it and see if that was a buy point. Yeah, Twitter's doing real well today. It must have been news driven or headline driven. But as you can see on my FibFan setup here, as far as my rules go, this was not even a buy. I would have missed this one too. So, sometimes if you see something really making some really good profits, at least you can quantify why you didn't get into it by doing a little bit of research real quick like. And then on the put side, real quick here, we'll just pull them up. And we'll know, which I'm sure there's a bunch of them. Bank of America. You don't like seeing, not Bank of America, Boeing. Okay, Boeing. Basically, BP, energy companies, General Motors, really getting slammed here on the put side. So it looks like BP, General Motors. I heard that the Japanese car companies were really getting slammed in the overnight session. So I don't know if we could have capitalized on that move or not. You pull it up here and you look real quick here, and on the 5 minutes, and it looks like most of the move was already done before we even were able to start trading today. So not really a great opportunity to push further to the downside. Too much risk in my opinion, but what can I say? And then we still have some negative pressure on Disney, Carnival. Gilead had a downgrade today, so those big gains in the calls Friday, they're taking some of that back. And then I was trying to get AMD to for a version back up, which didn't seem to work. So it's one of the big ones. And Facebook, that's one I wanted to talk about. I think Facebook's a broken chart pattern, and I'm very leery of trying to push that to the upside going forward here. So basically, we got the FibFans, and let me show you this on a different time frame. Still not showing it. 1 second here. Let me try to clean this up a little bit. Okay, what I was seeing on Facebook today, you see on the longer time frame, 1, 2, 3. It's the third FAM on Facebook. Okay, and I was looking at this first thing this morning, and I was considering taking this one to a long. I just preferred Microsoft. I prefer buying off the 50%. In my opinion, this is a bearish bounce. So this to me is a not necessarily very safe at all to be taking this trade, but something to keep in mind going forward here. And then off of this pattern right here, okay, we are broken down away from this pattern. So this to me is a broken, this entire move right through here is a broken pattern to me, in my opinion. And this here is pretty much a dead cat bounce, in my opinion, until proven otherwise. So that's why I passed on any type of responsive buy signals to speak of in Facebook today. See, we're catching that responsive bid of this level. So up here is where I would think big buyers would want to start accumulating Facebook to the upside. So I'll be watching this into the close. If we manage to rally up here into the close, I actually might take a small position to the upside if Facebook can recapture the 175.63 area. Okay, that's just something I got to watch. I do think this is a broken pattern. It shouldn't be with everything going on. You would think everybody and their brother is using Facebook right now with the whole coronavirus thing. So, but the advertising, the ad revenue is weighing on Facebook and Google, and the XLC is the communication. I think it's XLC, yeah, XLC. No. So ELC. 1 second here, I'll find it. Okay, here it is. XLC. Believe it or not, Netflix is in this sector. This is heavily weighted on ad revenue. This whole sector, XLC, and so that's another reason why I'm leery on Netflix as well. This sector is under an immense pressure right here going forward. This is one of the sectors with the whole coronavirus. They're taking it on the chin. So, as you can see, this thing has just been decimated over this, and this entire pattern up here is completely broken. We are catching a nice little bid as we speak right now, but this is something to keep on watch. You have to go out on a much longer time frame to understand your next area. So you have to go all the way back here to draw your next support and resistance zones for this trade. And it's nice to see that we're catching a little bit of bid right here. We're right near the day highs, or well, not near the day highs, but in the upper part of the day highs for this sector. So, but Netflix is a major contributor to this thing, and this is what I'm looking at on the smaller time frames with Netflix. On this trend here, and we are below our moving averages on our Netflix, and it hasn't reset yet. I'm looking for a move down to the 331 area for a responsive long setup potential in Netflix. Because you could see how it's been trading in this little trading range. So this is something I am keeping on watch going forward here. So Netflix should benefit very well from this coronavirus, but it, like most of the markets, have just gotten completely decimated, and that whole sector is being destroyed here. So this is another one which we'll see how the close goes. You see how the volumes are going. There's no one really interested at all at these prices for Netflix today. So keep that in mind going forward. It is on below average volume trading today, so that it might be a good sign going forward on this sell-off. Okay, that's another one on my watch. I want to get into the long side at the right time. Okay, that's everything on what I want to talk about this morning. Some of the stuff that I'm talking about. If you like the video, like it. Please, if you're seeing stuff that I'm not seeing, or if if you disagree with something I'm saying, please leave comments below. I appreciate all the feedback. I'm just trying my best to make some money where I can. And I've learned my lesson Friday. I went and gave back all my Apple gains. I could have had a very good close for the day, and I ended up losing money on the day by trying to continue to trade through the day. And I'm actually having my best success by buying the opening tick and closing out within 10-15 minutes at open. And those are the trades that seem to be working for me. And anything intraday, I'm just getting destroyed on. I'm just having very bad luck. So that's what's working for me right now, and I'm going to keep doing it until it doesn't work. So at any rate, thanks a lot. I'll see you guys in the trading room, and please, just ask plenty of questions. And I appreciate all your guys' help, because a lot of your call outs are really home runs here lately. So good. Oh, congratulations to Artemis for being so big net short over the weekend. Boy, I can just imagine what kind of P&L you have today. So good luck, everybody.